Let's go to Matt Nesto, who has some breaking news right now. Nope, we're not going to do that. Instead, we'll go to Trish.
Okay, and I'm going to change the subject again.
Good.
All right, so what will the open budget mean for stocks going forward? That's what we want to ask here. We're going to talk with Tom Lydon, ETF Trends editor, also Barry James, president of James Advantage Funds. Guys, Barry, I'll kick it off with you here. What's your overall sense of what the budget's going to mean for the market right now?
Well, as I look at it, it will be a positive in one sense in that there'll be a lot of spending done this year. It's not very efficient spending. The research we've done shows it takes $7 of government spending to equal $1 private sector spending. But the biggest weight on the stock market will be the taxes. There's talk of about $2 trillion in tax increases over the next 10 years built into this budget, and it really is very punishing for those that employ people, the small businesses.
So how does that affect
we've done, the studies we've done show that, yeah, well, what happens is the market tends to fall 40% of the time the year before tax increases come in. Businesses are sitting on the sidelines. Talk to many small business owners, and they're saying they're not going to do anything till they know, exactly what rules and regulations and where the economy's going.
Yeah, that's part of that
and
whole
with all this
issue
up
of
in the
making
air in
something
Washington,
permanent so that people have some sense of where they go from there. Barry, or rather Tom, what's your sense of where an investor needs to be putting their money right now, given what's going on in Washington?
Well, the big thing is, will these tax proposals actually get through? That's the big question. At this point, we're seeing, if we look at the basics, earnings are positive. They're 6-to-1 surprises versus disappoints right now. And Trish, the recent retracement that we saw in the market was a classic technical rebound, hit the 200-day average in the major market indexes, and then the past couple days has bounced back. So it's very positive for the market, and the political gridlock that we're seeing right now, again, is positive for the market as we go forward.
I don't know about that, Barry. If you look in the long term, though, it seems like this is going to mean terrible things for the dollar as we see, the debt mount to in the out years 75% of GDP. That's going to be awful for the dollar, and we've seen stocks trade up as the dollar goes down, right? I say that tongue in cheek.
That has been true.
Yeah. I mean, it has been. It's terrible for the rest of the economy. It's terrible for Americans when the dollar gets crushed, but it could be good for stocks.
Well, it's good for exports and it's good for commodities when the dollar gets weak. But we're seeing, obviously, some strength in the dollar right now. It's a good repartee we're having. We see just the opposite, the likelihood of a very significant correction in stocks, a little bit too much enthusiasm. And even though the earnings are coming in on a positive surprise note, only about half of the companies are coming in with better earnings than a year ago, and only about 40% have better revenues than a year ago. So these things build together, we think, to form a picture that we're likely to have a much lower market. It's time to get defensive, to pull back, to get some cash, to get some high-grade bonds in your portfolio to preserve capital.
Can I just get in here? I want to ask Tom, one of the things that troubles me about this tax hike story is that you're taxing businesses and banks quite substantially, Tom. And I want, you go through the list, this tax on foreign earnings, GE, Caterpillar, Campbell Soup, tech companies, insurance companies, pharmaceutical companies, and then, of course, the bank tax. Now, you may be right. It may not go through. That's an interesting point. But if those tax hikes on business were to go through, Tom, how does that affect your investment strategy?
Well, it's true, Larry. I mean, the bottom line is small businesses need to improve. We need to get more jobs. They're giving some benefits to the middle class. They're giving some benefits to small businesses. This TARP program where they're giving $30 billion to the small banks that are announcing today. Those are good things, but we need more of that, less of taxing with the wealthy.
I mean, the net effect is business tax hikes are vastly greater than any of these little teensy tiny temporary tax credits.
You're right. It's 5-to-1, Larry, and
right.
In the end, it's not going to work. So
I'm sorry, I have to interrupt all of you. We're going to go to Matt Nesto, who has some breaking news. Thanks to both of our guests for joining us there. Matt